Yeah, so I think before answering that, I just wanted to highlight some of the paradigm shifts that we are seeing, which also kind of compels banks to look at differently. So first thing I would imagine, one has to also look at the way the whole digital public infrastructure is evolving. So India being a classic example, where if you look at the whole digital public infrastructure, you've got the GST network, which came, almost a decade ago. You've got the Aadhaar network, but more interestingly, in the space, Creditable operates like working capital. You have things like e-invoicing, e-waybill, all of those are coming, which just allows banks, to look at this very differently on how they can deliver their products and services, particularly to the SMEs and the corporate segment. Equally, the other thing that's also important is there are too many opportunities out there, for partnership, etc. So you would see today there are so many new platforms which have come up. So there's no easy answer to it. And I would imagine if you talk to any banker, they would say possibly they are meeting one platform or a tech company on a daily basis. So I think what's really important is how for banks, one of the key strategies, how do you be agile? You have like quick time to market such that you are able to kind of latch on the opportunity, try it fast, see what works, go deep into that. What does not work, very quickly move away from it, So being agile is extremely important. The second aspect is, I would imagine, continuous innovation, right? Keeping an eye on the future, what's changing, which is what tech companies have really done well in the past. So being an ex-banker for over 2 decades, there are 3 important aspects that I would like to emphasize. One, I think there's a culture in banks of being unforgiving when you fail. Now, and often now you've seen the message from top management in a lot of banks that we want to try new things, we want to fail fast, but I don't think that's kind of gone down the chain. Still, I believe a lot of banks can be extremely tough, or the performance systems within the bank can be extremely tough on an individual if you take any personal risk, to try innovative stuff, right? So I think that has to change, where banks become more forgiving of individuals who, with the right intent, have tried to do the right thing, and for whatever reason outside of their control did not work. Second aspect I would like to say is, today, a lot of banks, when they talk to, let's say, FinTechs like CredAble or any other firm out there, there's a mindset where they don't look at us as a partner, they look at us as a vendor. And to my mind, the moment you're looking at someone like a vendor, the mindset almost is like, I'm going to tell you what I want, and all you have to do is deliver that to me. And that generally does not work. Whereas what I have seen working now, being on the other side as well, working with banks, as clients, what I've seen is banks which embrace a more partnership-led approach, where, look, you guys are ahead of the curve, you tell us what needs to be done, we're not looking at you as a vendor, but rather a partner, just makes it so much more different. So that's a big shift I would imagine is required. And the third and the most important thing I would like to say is, you still have a team on the side innovating without any eventual P&L ownership, so what's really important is, how do you marry the two, where the team that's innovating or the team that would eventually own the P&L are actually working together. Very often we've seen that there's one part of the bank which is kind of building the product or the innovation, and at some point it gets handed over to a completely different team, which is now expected to commercialize it and deliver the P&L impact, right? And you see a lot of friction at that point. So as long as you can bring that together from the word go, it kind of just would deliver a much better result. So again, I believe the challenge today is not particularly on this aspect. I don't see it like consistent across banks. So if I look at particularly the retail segment, or as individuals when we bank, most banks have kind of done a really good job there, where They've really embraced technology, and even the customer experience, the customer expectation has kind of gone up significantly, right? So there, I believe now it's become a table stake where you have to deliver a good customer service digitally. Where I see a big opportunity is particularly on the SME and corporate side, where banks are still kind of solving their back-end capabilities. It's a lot more focus on digitizing, making their processes efficient, which is where I see a big opportunity for banks to think like tech companies, work like tech companies, where you do have now today an ability to even onboard a corporate or a business digitally. You have the ability to deliver new products and services digitally, particularly in the space of, let's say, trade finance. So we ourselves, CredAble as a fintech, has been able to do that, where we are offering products, let's say, like an invoice financing, and for very small ticket sizes to the SME segment, and something which was not accessible by them, or the cost to serve was very high, for the banks in the past. Yeah, so one big difference now, having been on both sides, I've seen is, and I do appreciate this a lot, is like the hunger that you see in fintechs is a lot more compared to what you would see when you're working for a large organization or for a bank, for that matter, which then leads to a lot of frugality, which then leads to kind of delivering stuff within a compressed time frame and within a certain cost budgets. So that's something is a big difference which a lot of banks can learn. The second element which I loved about, and my one biggest learning in the last 3 years I've been in this space, has been that in fintechs you learn how to keep things simple. In banks, often what I've seen is you try and solve for complexity ahead of time. You're all conditioned to think like a large organization. You're all conditioned to think that there's a big problem. Within fintech, there's an art of keeping things really simple, So that's something I really like. In general, I've seen the two broad strategies where a lot of banks have gone and incubated their own ventures, I'm not particularly a big fan of that because I believe in those instances, the things that I've highlighted, with be it on hunger, frugality, or around, keeping things simple does not kind of, is not there. I'm a bigger fan of, if my personal view, where banks have gone and incubated other fintechs, either by investing in them or supporting them or partnering with them. I'm a bigger fan of that because that just brings the best of both worlds. And we ourselves at CredAble have seen that, where we're thankful to a number of banks who've incubated us, and today made us the company we are. Yeah, so I would start by saying that in no sense I would want to undermine the importance of security and compliance for banks, particularly when they're dealing with people's money. So it's not an easy challenge or an easy task. So fully respecting that, I believe one key thing that can be done, to my mind, is differentiating or separating your core technology versus non-core. Often what has happened is you've called everything as core, right? So today, let's say as an example, a core banking platform would also cater to a lot of things which may not from a true sense be core, like a pricing or something else, So the more you can separate that out and focus a lot more on the security and compliance aspects around your core technology, and maybe there's a bit more leeway to experiment new things on your non-core technology, So that's one way, which would also make it more agile, So that's the way I would kind of see it. Yeah. Yeah. So the great thing about BaaS is one lot of fintechs which are offering this are looking for partnerships. They don't see banks as competition at all. In fact, they want to take a very partnership approach because they know that they would never have the reach or the deep pockets that the banks have. So where it really kind of starts working for the bank, and a lot of banks increasingly have started seeing fintechs, other tech companies as partners and not competition. So where it starts really working is it provides the bank to be agile, right? So everything that we spoke about, one of the key themes was like with the paradigm shift, with so many opportunities around how do you be agile, right? And you don't take, let's say, 9 to 12 months or 24 months to deliver anything or to forge a new partnership, which is where, and also equally spend millions of dollars to do that, right? Because you do not know at the end of it how big the opportunity is, right? Till you try it. So which is where the BaaS kind of provides you that agility to try a number of new opportunities at a very low cost. And often the biggest advantage that banks do face in this is one, it's quick time to market. They could still own the customer relationship if they like under the BaaS model. And lastly, what it also kind of allows them is a lot of tech companies or BaaS providers like CredAble do take a stake in the ground, in the sense that their payoffs are also linked to a successful implementation, and not just implementation, a successful business case being delivered. I think the obvious one is picking the right BaaS partner. And because we're talking of banking as a service and we're not talking of a pure play technology provider, it's important to pick a partner who not only has the right technology platform, but also has a good understanding of the business itself. So because in all likelihood, in a BaaS model, it tends to be a managed service by the partner, where they're offering more than technology, to the bank. So picking the right partner beyond the technology platform is extremely important. The second aspect I would like to emphasize is this is not just about digitizing existing services. So there's obviously an element of that, how you can change, how you can deliver existing services in a better way. But I also see this as a big opportunity to deliver new products and services to customers whom you've not been able to do in the past. So one of the areas segment which I'm very passionate about is MSME. And historically, most banks will not offer trade finance products, right? Be it LC, be it invoice financing to SMEs, because the cost to serve in a traditional way was very high. Which is where with BaaS partnerships today, you're able to provide trade finance products to the same segment in a much more cost efficient way, Yes, the first obvious answer to me is it's not about either this or that. It can be a bit of both. So that's one thing I just wanted to emphasize. The way I look at this is maybe slightly different. So I see three important aspects. So one is from a banking perspective, one is like who's originating and how are you originating, right? Your clients. Second is who's providing the capability of the platform that you need to deliver your products and services to those clients. And the third aspect is who's providing those, let's say, financial products or balance sheet, right? So the most important thing for the bank is the third, right? Which is where their strength is. So the financial product services, how do you commercialize it? Which is where the bank should be majorly focused on. On origination, the way the world has moved is like it's going to be a combination approach, right? So you do have third-party channels who could originate for you. You could have your own channels, of origination. The second aspect, which is where the crux of your question is the capability platform layer, right? And I believe it's a bit of both. Some of your core technology, some of which you would want to be your competitive edge, maybe that's built. But I've also seen, and I'm a bigger fan of this model where you go and partner with someone, and eventually, if you like the technology, you also white label it. So I would kind of lean towards saying that partnering, co-creating, white labeling along with other fintechs, other tech companies is like equally important, or in fact is actually becoming a bigger play so that the banks can be more agile. They can deliver certain things at low cost. They could try multiple opportunities. So obviously, there are so many platforms out there, and one of the where the banks can actually provide non-financial platforms. A bank can provide financial services, right from B2C e-commerce marketplaces, B2B e-commerce marketplaces, ERP solution providers, logistics platforms, so you name it. And what I was focusing on is just in the business segment for MSMEs and corporates. So I think one big challenge that typically banks do have in embedded finance space is there are big platforms, but these platforms are so big that you would be one of the many banks working with them. And on the other hand, you have a huge number of small platforms where you do not know where the real opportunity kind of lies, right? Unless you try it. So I think building that, to me, the second challenge also is like believing that one size, you build one capability which will fit everyone, is also a complete myth in my experience. So I think where it starts working is where banks can partner with service providers, again, BaaS providers like Creditable, there are a number of other ones who can very quickly bring that agility and allow the bank to work with multiple such platforms where they can embed their service. So that clearly becomes a very good approach, and it allows you to try. And wherever there's success seen, their banks can then start in-housing some of the capabilities so that they can retain their competitive edge, right? So that's clearly one strategy to go about this, where you start building that muscle power to go and partner with number of organizations, very quickly identify which one is going to work, which one is not going to work, and then going deep into those, right? The ones which are working. The second aspect, which I've generally seen, and it's more cultural in nature, often a lot of these partnership discussions at bank, it's a great topic. It's top of the agenda for most senior management within banks. So it starts with a clear moonshot that this is what we want to achieve as part of MVP. But where it very soon moves on to is a path of least resistance within the organization. So how can I get this launched without kind of, ruffling too many feathers within the bank? And what you end up then delivering is something not what the partner platform would like, and not what the customer would want, right? So just being mindful and being true to that MVP that you promised is extremely important. And third, just being clear of what you're expecting of that partner non-financial platform, right? Are you expecting them to originate on your behalf? Are you expecting data? Are you expecting them to help even collect your money back for some of the products that you've offered, particularly any lending products, So that's extremely important, being very clear from the outset what you're expecting of the partnership. I think the one thing I would like to say is it's a space where you have to, for banks, you have to try many opportunities, and then you'll realize that if you're trying 10 partnerships, you're trying 10 new, let's say, products, 2 are going to be successful and they're going to deliver maybe 80% of the growth that you want over the next 3 to 5 years. But the ability to try those 10 partnerships to identify the 2 that's going to be successful is what banks would need, which is what organizations like Credable have done. So we partnered again with a number of organizations. By I think every other week we have a new partnership, and we go in with the view that yes, some would be successful, some would not be able to deliver. But the idea is to kind of do that quickly, rather than trying to analyze it too much, trying to kind of predict. We kind of get the use case live and try and figure it out then, So that's the approach that banks would have to take. Traditional banks would usually, a product launch in a bank or a partnership launch would be anywhere between 12 to 24 months journey. Whereas what, let's say, new age companies like us have been able to do is launch new partnerships, launch new products within 3 months, with the view that, if it works, then I'm going to invest a lot more, make it a lot more seamless and so on, But it's important that you try it out fast. So I've been with Creditable for now around 1.5 years. And one thing that I take great pride at Creditable is it's not just the technology platform that we have got, but it's also the quality of people that we have in the organization. So it's in true sense, let's say a technology company which is built for bankers, and it's built by bankers. And I would say, just want to caveat, it's not completely by bankers, but it's a good combination of bankers and tech company. But most importantly, also we do kind of help run some of the relationships or the mandates that we have with banks as well, right? So we do understand both sides of the coin. The second aspect about Creditable is being a platform ourselves, particularly in our home market, India, and being a lender in India. We do understand the intricacies of trade finance, working capital finance, supply chain finance really well, because we directly deal with the corporates, we directly deal with SMEs, we kind of even manage regulators and so on. And that kind of just gives us an edge as we kind of provide our platform or our technology to other banks, right? Because we have a much deeper understanding doing it ourselves firsthand. We're very focused on working capital. So unlike a lot of other technology providers, it's not like a solution which was developed for, or a platform developed for retail, and now that's kind of morphed into supporting working capital financing and so on. Creditable as a platform is entirely focused on working capital. That's the one thing that we really understand well, and everything that we've solved around is around working capital, and there's so much that can be done. So we've built a comprehensive suite of capabilities around working capital financing, which can very well complement banks' existing infrastructure. Lastly, we do take an ecosystem approach, right? So it's not like a pure play technology platform that we're providing. We do kind of have connects into a digital public infrastructure within a country, or other key utility providers, be it on analyzing bank statements, be it connecting to ERP solutions, or even some of the core banking platforms which a lot of banks use. So that's what kind of differentiates Creditable from a lot of other platforms, and I'm sure they would have their own advantage, but this is where we pride ourselves. So one key area I would imagine, particularly for banks, I think we all know that interest rates are not going to go up any further. And I think a lot of banks did have this nice tailwind where, because of rates going up, and particularly in the SME space, they had big deposit balance sheets. So they had a good lift in their revenues without much underlying growth. But as interest rates are stabilizing and even predicted to go down, I think lending would become an important machinery where banks will have to grow faster in that segment to keep growing. So I do see a lot of banks emphasizing a lot more on the lending side. So that's clearly one of my key takeaways. The second important aspect would be around the way the entire digital public infrastructure is evolving in a number of markets. India clearly is leading the pack in the region, and there's a lot to learn from India. But I could talk of at least 3 to 4 markets where you either have a corporate tax infrastructure being implemented, or e-invoicing being implemented, or the entire direct tax infrastructure, around VAT, GST, changing, which just kind of would enable a very different way of looking at how banks provide working capital services, And we already in a number of conversations with banks where they want us to work along with them and see how they can be ahead of the curve in kind of, solving the opportunities around it. So those are two, I would say, important points. I would imagine generally the collaboration or the mindset to partner with BaaS service providers, with FinTechs, by banks, will continue to improve. So that's something it has already started happening, and it will only get better, in 2024.